Hello and welcome to Big Deal. I'm Nisha Poddar. Now, electric vehicle sector in India is being catapulted to another level of growth with a couple of manufacturers making way to the public market. With electrification thrust as well as government support, this space is seeing high interest and traction amongst the investors. But what are those sector dynamics, levers for profitability and also the valuation parameters? Let's find out from experts in the sector. Let me welcome on the show Amitabh Saran of Altigreen, Sridhar Narayan from GF Capital Partners and Srihari Mulgund, EY-Parthenon, India. Gentlemen, so good to have you on CNBC TV18. Now, to begin with, I must also point out that mobility is on track to become the first sector to achieve full electrification in the country. Srihari, beginning with you, how do you see the penetration and the growth projection across various verticals of electric vehicles?
Thanks, Nisha. Great to be on the show, and I look forward to this discussion with my colleagues. So the Indian electrification journey in the automotive sector has just started. If you take the parlance of IPL, the first 5 years or 6 years of power play have been phenomenal for the Indian market. FY24, our market was roughly about 1.6 million units of electric vehicles sold, of which roughly 950,000 were electric two-wheelers. We sold roughly about 90,000 of electric four-wheelers and give or take about 85,000 of electric three-wheelers in the L5 category. One of the large categories in India also remains the electric rickshaws, which we sold roughly about 500,000 vehicles. We see significant penetration and growth happening in electric two-wheelers and three-wheelers. And also the next bellwether will be the light commercial vehicle market moving forward. Electric two-wheelers, 2030, we expect about 30 to 35% penetration, assuming scooters are the main sort of products to be electrified. But if motorcycles take parlance, then you probably could see a significant more penetration in the market. Electric three-wheeler market, about 35% penetration, particularly on the passenger side. The cargo side would be a lot bigger, roughly about 50% penetration. And then the electric four-wheeler side, we expect about 20 to 25% penetration by 2030.
All right, so high intensity of growth that is being projected for the electric vehicle segment. Let me throw this question to one of the manufacturers. Amitabh, what's your point of view as a manufacturer, as an entrepreneur, especially with what we are seeing is that the commercial EV is able to crack the market, a very price-sensitive market in India first?
Absolutely. And, commercial vehicles will be the first to convert. And that's largely because, they're driven by business. They're driven by profits. They're driven as a fleet company. In India, commercial vehicles have been graded according to payload, according to GVW, distance and all that. And if you look at any of these parameters, EVs will be the ones to win in this segment. And that's the reason why very heavy and very ambitious targets, even for 2030, as far as the electrification goals are concerned. I'm, of course, very, very bullish on three-wheelers, small commercial four-wheelers. We do believe, as Altigreen, that three-wheelers will touch the 80+% penetration in the segment. I think buses will also be extremely important, 40 to 50%. We do believe buses also, intra-city buses, to get converted. And one important segment, which is based on usage, is the taxi segment, where it's the same personal vehicle used as a taxi. We do believe that about 25% penetration is going to happen in that segment also by 2030.
Right. All right. So those are big projections coming in. Let me, take this question forward with an investor, because all of this ecosystem building needs investments from key investors. Sridhar, you recently invested in one of the Murugappa Group companies in the EV space, which is more focused towards the commercial vehicles. What is the rationale of investment in this space, according to you?
Thank you, Nisha. As an equity investor, we are, of course, underwriting growth and profitability over the medium to long term. Our rationale in the commercial vehicle segment is that The underlying benefit of an electric vehicle is a significantly lower operating expense, in some cases as low as 1/10 compared to a diesel or a petrol vehicle. And that benefit is best realized when the vehicle is run 70 to maybe 150 kilometers a day. So those end use cases or applications where the vehicle finds significant running per day, those use cases are the ones that will find it most easy to migrate to electric mobility. And today, those use cases largely related to commercial applications. So electric three-wheelers that are used for commercial applications, either for passenger mobility or for cargo mobility, light commercial vehicles, and to some extent even medium and heavy commercial vehicles, where the operating distances are fairly significant and fairly defined. We think those segments are best suited for migrating to electric mobility. And that's our broad underwriting thesis as our investment.
Right. So, Sridhar, I want to pick your brain a little more on this. There are two, pure play EV players which are heading for the IPO market reportedly. Now, how do you see the scenario in India when it comes to the exit options for an investor like yourself?
Good question, Nisha. Exit is a very integral part of any investor's underwriting thesis, and therefore, even though we come in with a fairly long-term investing timeline, underwriting that exit is important for us. In our view, the IPO markets will be very receptive to pure play EVs. The reason is twofold. One, we believe there is a long-term growth trend in electric mobility. Secondly, we believe there is a large enough profit pool that is available for electric mobility OEMs over the medium to long term.
Right.
Third, we also believe that unlike traditional OEMs, which always have this risk of cannibalization, where as they are growing their electric fleet, they are in some ways cannibalizing their traditional fleet. Pure play EV OEMs don't have that risk, and therefore we think those kind of platforms will be much better received in the IPO markets.
All right. Let me take that question also to add more perspective on this. Srihari, what is the view you're getting from across the board investors that you have an interface with when it comes to deal traction as well as investor interest in the electric vehicle segment?
Nisha, when you look at the last 4 years, I think we've had some fantastic transactions in the EV space, roughly about 800 plus transactions involving 250 odd companies, roughly about $6.5 billion of investments that have been made. Some marquee investments obviously has there in the public domain, investments in Tata, Mahindra, Ola, and you mentioned Murugappa Group also. Now, when you look at the momentum moving forward, we see a lot of positive traction, be it either venture capital or early stage companies who are looking to invest in technology assets that gives companies edge on new age technologies in the EV sector. We've also seen a lot of traction from the private equity funds and the sovereign wealth funds. We're also seeing interesting uptake from the ESG funds, particularly in areas related to energy transition. And we'll also see action in the battery material space coming in the near future. And finally, one of the key areas that we are also seeing is strategics. A lot of the existing OEMs or tier one suppliers, they are taking sort of interest in picking up assets in the startup ecosystem, because the startup folks would have already built and proven the technology, gotten to a TRL level 5 or 6, and they can take it on and then take that into production. Finally, we are also seeing interest from some corridors, be it the India-Japan corridor or the India-UK corridor, to invest in the EV ecosystem. And we are seeing interest across the value chain, be it automotive OEMs or be it suppliers. We are seeing interest across. And also don't forget, there is a lot of momentum that we are seeing in the charging space also. Finally, one last thing, we also expect to see Indian companies picking up assets globally as they continue to build their R&D capabilities in the EV space.
All right. So all those, the entire bouquet of deals as well as investments. And I must also point out that while raising funds from LPs was a difficult task in the recent past, for many of the PEVC community, a large part of funding still came for green and clean tech. And all that money is going to go into sectors of the future like renewables and EV. Amitabh, now we've set the stage for how important this sector is. But there are many aspects and eligibility criteria and valuation dynamics that Sridhar as an investor had pointed out. Let me pick one of the most important points which really defines whether a manufacturer can really break or crack a market or not in India. TCO, the total cost of ownership. How is that panning out and what are the dynamics over there? And apart from that, the other factors surrounding it.
Yeah, so TCO is number one, definitely. EVs clearly stand out. I think Sridhar mentioned a figure of about 10%. Anywhere from 30 to 50% in the case of a three-wheeler is the total cost of ownership benefit over the lifetime of the vehicle. So I think price, TCO, like you rightly said, is kind of well known. It's established in the commercial vehicle space, and that's the reason why we're seeing an uptake in this sector. I think the other important things from a commercial vehicle perspective are actually peace of mind. You need to have a very reliable vehicle, and hence service becomes a very, very important criteria for a person to decide whether they want to own an EV or not. I think OEMs will have to differentiate in terms of their service offerings, how quickly the cost of maintenance of these vehicles, those become very important. One of the other things that we as OEMs are also using, as well as the other EV OEMs, is of course batteries and battery warranties. Considering that a battery is about 35 to 40% of the total price of a vehicle, it is a very important criteria in a person's decision making.
All right. So Amitabh, you've just read my mind on this one. In fact, we'll slip into a short breather and we'll talk more in details about battery assembly as well as cell manufacturing and its chemistry as well as cost dynamics, because it's the biggest lever for pushing profitability in the electric vehicle space and a critical valuation dynamic there. With that, we'll slip into a short breather and come back and talk more about that.